All right, we are technically at start time. So I'm going to start because we got some housekeeping to go over first, and we will get people coming in still while that's going on. So I want to thank everybody for being here today. This is very exciting. This is the first of our new series on practice management topics. This was something I had thought about a couple months ago and really was hoping that we'd be able to get out some really cool information to help the profession. My whole goal is to give high quality, not my whole goal, but one of my goals is to give high quality free CPE out to the professional accounting profession. And so this is the start of the first of that one, the practice management series. Some of you have probably been on our tax series. The tax series will continue, and spoiler or teaser, we have another series that's going to probably start in the fall as well. So we'll be doing a third monthly webinar as well. Dan, if you want to go to the next slide, that'd be great. And Dan will be driving this. I'll be getting out of the way here in a minute. A little bit of housekeeping for today's presentation. As always, this is for CPE. If you need CPE, answer 3 of the 4 polling questions that we will let you know when they pop up during the presentation, and stay logged in for at least 50 minutes. Your CPE certificate will be emailed to you with the email you register with by sometime early next week. I just want to let you know that. Don't expect it tomorrow. We are making this process more streamlined, but for right now, it'll be early next week when you'll get your CPE certificate. If you have any questions today, please type those into the Q&A tab. I'm going to be monitoring that for Dan, and even though I haven't introduced Dan yet, I'll be monitoring that for Dan, and we will ask some questions of him during the presentation if any come up. If not, we'll keep going, but ask any questions that come to your mind. One last thing. These slides will be available to you. They will be available as early as tomorrow morning, and this presentation will probably be on YouTube by tomorrow morning as well. And so with that being said, let's go into a couple quick introductions. We're going to save Dan for last. Dan, you want to go to the next slide, please? All right, so I'm going to monitor this, Dan, or I'm really the monitor of this. Dan's going to be the meat and potatoes of the presentation today. Background on me: I'm a partner at Trimerit. Trimerit and the Unique CPA are the 2 firms that are Unique CPAs. My alter ego, I guess. Technically, I'm not the Unique CPA. Everybody I talk to is the Unique CPA, but that's our podcast / other things, and I'm host of the podcast. Write a lot of articles for the profession, get to speak a lot, which I enjoy tremendously. I got a couple recognitions recently, which I greatly appreciate, listed as one to watch in Accounting Today's 2021 top 100 most influential people in accounting. Oh, hard to say, Randy. And as of Monday this week, I'm really excited about this. As of Monday this week, I was appointed to Intuit's Tax Council. It's a 3-year term that just starts. So for the next 3 years, I'm going to have some really cool information I'm going to be privy to that we'll be able to share with the industry as well. Dan, one more, please. And here's the man of the hour, Dan McMahon. Dan is founder and managing partner of Integrated Growth Advisors. He has a varied history in the public accounting field, 30 years over local, regional, national, and even international firms. Prior to founding AGI, he served as an audit partner and partner in charge of sales and marketing, which is important. I think sales and marketing is a key thing, and maybe Dan and I will get on another webinar and talk about that, because that is a topic that I think the accounting profession really can expand on. And so I'm looking forward to maybe doing that again. And this was for a $30 million regional firm out of Massachusetts that Dan was doing these things. He currently advises public accounting profession leaders at firms across on leadership in firms across the U.S. on governance, sustainability, generational transferability, and building increased equity valuation. Some of the things we'll be talking about today. Dan's firm, AGI, is a value creation and business growth advisory firm focused on empowering business leaders to systematically grow and enhance their firm's value. Perfect. I love that information. And he serves clients throughout the U.S. Enough of me. We're going to hand this over to Dan. Dan, educate us. Thank you for being here.
Okay, Randy, thank you very much. Appreciate the introduction. Can you hear me clearly?
I can hear you clearly, and I
Okay,
forgot to ask everybody. I assume they hear us, but let me do a quick. Hey, somebody put in the chat, you see Dan's slides and you hear me talking. I assume if they didn't hear me, they would have told me by now. So, oh yeah, they're good. All right, Dan, it's all you.
okay. So we're going to talk about charting your path towards a higher valuation with the subtitle of Building a Sustainable and Transferable Firm. Glad to be with you today. An agenda that I've had laid out for our discussion is I'd like to talk about some objectives for our discussion. Then after that, I'm going to talk a little bit about why this topic is important. I've come up the ranks in public accounting, as you saw in the last slide. Been with the profession for over 30 years. And I'd say when I started in the profession, this was very far from a topic that was front of people's minds. So I'm going to talk about why this topic is important. I'm going to look at three types of firm members, people that are part of an accounting firm. We're going to explore key elements of CPA firm evaluations. And then we'll talk a little bit about what you can do next. Depending on how we go in terms of our timing, we can pause for questions along the way, as Randy said, and we certainly can take questions at the end. I'll try to save time for that. Okay, so session objectives. What I'd like to be able to accomplish here today is for everybody to understand that the performance of your CPA firm, and you know, I could make an assumption that a lot of people that are attending today either work in a CPA firm or are in management or are owners of a CPA firm. I'm going to speak a lot from that perspective, but that doesn't necessarily mean that this doesn't apply to everybody else. This topic is applicable to everyone in an accounting firm. So performance is not the only thing we should be looking at when we think about the valuation of a firm. Value and performance are interrelated, but they're not the same thing. So I want to get that on the table. We're going to look at sustainability and transferability of processes, of revenue streams, of the business asset, the CPA firm. A sustainable and transferable firm is a valuable firm. I'd like to be able to make the point that every firm has an opportunity to measure and improve value. This doesn't happen really that often. How often would a private company pause at any given point in time in the year to actually measure their value and come up with a plan to improve it right away? So every firm has that opportunity. And then I'd like to be able to give you a chance to walk away with some action items to use in your firm today. We can cover that in the Q&A section, as well as the preceding slides that will precede Q&A. If we have extra time, I've got an addendum that actually has some action items. If we don't have time, when the slides are shared with you by Randy, you'll have those action items for your use right away. So those are our objectives. Randy, let's do polling question number 1.
All right, I will pop that up. And polling question number 1 is launched. Is a CPA firm, I should have said, and that's my mistake, not Dan's, is a CPA firm a business? True or false? Is a CPA firm is a business? Man, I can't even do this. True or false? I think people get the point of what I'm trying to ask. I'm looking at Q&A, Dan. Nothing in yet, which I wouldn't expect since we just got started. So what we'll do is we'll keep this open for another, 20 seconds or so, and then I'm going to close the poll. So looking, not everybody has responded yet. And you haven't responded, please do so, because I'm going to close this poll because we're at 100%. That's awesome. 100. Dan, you got 100% participation. That's great. All right. I am ending the poll and handing it back over. And the answer was true, at least in our opinion. And everybody said true.
That's excellent. Okay, so we're going to talk here Having trouble advancing the slide.
Just click on your slides, click on the screen, and then you can forward it.
All right, there we go.
Yep.
All right, why this topic is important. A CPA firm is a business, and a business has a profit motive, right? So I put this in here, and Randy and I came up with this brilliant polling question, because believe it or not, a lot of CPAs work in a practice. They talk about the practice. They've got a practice. They work as a tax practitioner, or they work as an auditor and you'd have an audit practice. So a practice is kind of that baseline of getting started and going out to the marketplace and providing a service. A business is when you start to build certain processes around that practice. So when you have a firm, and I would define a firm as anytime you've got probably more than one person, more than a sole practitioner, you've got a business, and you're going to have to run your business like it's a business. Surprisingly, even accounting firms that I've spoken to in the past would say to me, Dan, this is really interesting information, but it's really more cut out for our clients, not really for us. We're just a CPA firm. And that just astounds me. So a CPA firm is a business, and a business has a profit motive. A profitable firm is not necessarily a more valuable firm. So we want to be able to find a way to marry the two, profit and value, or come up with elements of a firm that are valuable. It's very important to understand this. That's why this topic is so important. Owners should know where they stand. And why not know where your valuation stands at any given point in time? If you have stock in the stock market, you know the value of your stock any given point in time and any day. So owners really have a right to know where they stand. They deserve to understand the progress they've made and how they're eventually going to monetize the efforts they've made collectively over their careers and commitment to being an owner of a firm, as well as the risks they've taken as owners. And it's important to understand that when you commit to building value in an accounting firm, or really in any business, but we're talking about CPA firms today, if you commit to building value at the very top of the organization, and that attitude trickles down through the organization, that's going to equate to an engaged workforce. An engaged workforce drives more profitability. And another reason this is important is because there are aging baby boomers that we all know about. I think it's like 10,000 people per day are becoming baby boomers and nearing retirement. As owners of firms approach retirement, they need to be looking internally to understand if they've got a solution in-house for the next generation of owners, or they have to come up with another strategy. Sometimes that's to sell the firm. If you're going to sell the firm, you certainly would want to know what your valuation is in real time, because you want to be able to continue to build it. If you know value X today, could it be value X plus 10 in 10 months? And what do you need to do to get there? All right, so this is really why this is important. All right, types of firm members. The reason I wanted to talk about this, I just want to put this out there. Within an accounting firm, you're going to have senior partners who've spent the larger part of their careers building a firm, serving clients, running their own individual practices, but doing that as part of a business, as part of the firm. And their ownership should be convertible to cash. They deserve it, and they're seeking to convert it. So keep in mind that you're going to have senior partners. You're also going to have newer partners who are coming in, and they see the opportunity to build more value and create more equity. You know, when you come into an accounting firm as a partner, you come in at a very low equity level. And oftentimes when you transition out and you sell your equity, it becomes a pretty good substantial piece of your retirement. So we have senior partners, we have newer partners, and we have the next generation. Some who want to be partners, some who want to just become stakeholders of the organization as we go forward. That's managers, staff, and other types of employees. So as we think about the context of the firm, the message today applies to all of these types of firm members. And I want to keep that front and center as we go through each of these following slides. So I like to try and get an understanding. And if we were live today, I'd be looking either for a show of hands or for some audience participation. But I'd want to understand, how do you conceptualize value in your firm? And is it solely related to performance? We talked about earlier setting the table for performance being different from value, or is there something more? So how do you conceptualize value in your business? We'll take a closer look. Does the firm track growth and results? Is it simply operational and financial performance? Is your management team or your leadership, your managing partner, only looking on paper at what happens at the end of each month? Or is there a focus on valuation? All right, so we're going to take a closer look at value. When we think about finding value, with being a group of CPAs largely on this call, value can be defined many ways. Net book value is one way, fair market value of assets less liabilities. For a public company, price per share in an open market. The ability to generate future cash flows can be converted into a valuation of a business, some metric, a multiple of some metric. And then the point I want to make today is that if you have sustainable and transferable processes, revenues, value at the time of the transition of the firm, that's going to be a really good measure of value. Okay. We could look at it a lot of different ways. And as accountants, we know the different ways. But I wanted to put that out there just to kind of make sure that we can talk about that last bullet point today, but there are also other ways to value a business. Okay, Randy, polling question number 2.
Polling question number 2. We'll see if I have any typos on this one. What do you think the odds are? We are about to find out. They're probably high. Value can be defined many ways, including the net book value, fair market value of assets minus liabilities, price per share in an open market, multiple of some metric, or all or any of the above. Get your answers in quickly, please, because Dan has a lot of interesting information we need to get to, and I don't want to spend a lot of time on the open polls here. So we're at 76% participated. I want to see if we can get to 100 again. I guess we had enough people answering that everybody needs CP apparently. 85%. Let's get up over 90 and then I'm going to close it. We're at 39 seconds. I don't want to stay open too long. So great information that we're going to continue here on valuing the firm. I'm 60, so I'm going to need to, get out of the firm at some point. You're going to have to tell me what the value here is. So I'm looking to be educated. So.
We'd be happy to talk with you.
All right. All right. I'm going to end this poll in 2 seconds. 1, 2. That's it. Poll ended. And I'm not going to share the results, but pretty much everybody answered all or any of the above. Dan, back to you.
Okay. I put this slide in here just so that we can kind of understand that coming up with a valuation of a private company, and in this case, a CPA firm, is going to be different, of course, than a public company. And there are certain attributes of a public company and a private company. The public company being that there's an independent board of directors, there's corporate governance. Sorry about the slide advancing. Corporate governance, there's structure and process that's expected in a public company. Exchange of ownership can be done in an open market, whereas with a private company, it's limited. Management is not easily replaced in a private company, but it is interchangeable in a public company. So these are some of the things that lead to a private company being very different from a public company in terms of how do we figure out what the valuation is. Okay. Owner's discretion is very much a part of a private company. Certain governance related matters are important and required in a public company. So if we think about this in the context of a public company, The valuation is supported very much so by the infrastructure of the business. And the open stock market can pretty much be driven by the profitability, the earnings per share, certain metrics that people that invest in stocks in the stock market look at, but they're largely looking at how profitable the business is. And, there's a very competitive marketplace for management teams when their numbers quarterly or annually or semi-annually are hitting the street. They need to, drive as much profitability as possible to the marketplace so that the marketplace can buy more of their shares or hold their shares. So value is very much in line with profitability. A private company is different. And, we had that prior slide that talked about the different attributes. So with the private company, and let's say a CPA firm, value is from having profit that is sustainable and transferable. Now, when we say profit in this capacity, there are different ways to value a CPA firm. A CPA firm can be valued as a multiple of top line revenues. That's probably the most common element or way to value an accounting firm. But that's not always what the accounting firm will sell for, because the buyer is going to look at how efficient and effective their processes are and whether or not their processes are sustainable and transferable, or certainly their people are transferable and will stay and are accustomed to working within an organization that's got some structure. So the argument to be made here is that a public company is very much in line with profitability when they come up with the value. A CPA firm is going to be looking at whether or not certain things in the business are sustainable and transferable. All right, so how valuable is your firm? Many times when a company is going to be sold, and we work with accounting firms as well as other smaller to mid-sized businesses, 1 out of 4 private businesses, and we can also say CPA firms are included in that group, will sell at a price the owner is expecting when taken to market. I put this slide in here really just to show that, number one, just because you've got a business and you're billing and you're collecting and you're making it month to month, you're able to uphold your payroll and pay the rent and have some left over for the owners. A private business still has to go through a process to be sold or transitioned. We're not always talking about selling when we're talking about monitoring the value, but selling is going to be the ultimate test of what the valuation of the business is. So I've put this in here just so that we as CPAs can just kind of think about how a business goes through its life cycle. And just because your firm cash flows doesn't really mean that you're creating value. So you've got to make an internal effort to do that. And in this case, the statistics that we're looking at, only 1 in 4 are going to sell at the price that they think it's worth once they get done with due diligence and other elements that are being looked at before closing of the sale. All right, so 1 in 4 will sell at a good price. 3 out of 4 are lacking that internal valuation. Okay, Randy, polling question number 3. I've kind of got these bunched in at the front end of the presentation.
It works. They still have to stay logged in for 50 minutes. So as long as we do the questions, we're good. All right, polling question number 3 is launched. CPA firm value is equal to, and you can see those, a multiple of the number of employees on a particular date. This is launched, right? I have 0. Okay, now I got people answering. Balance sheet, profit that is sustainable and transferable, none of the above. Some people don't agree with you because I've got 2 none of the above so far. So I'm guessing you were getting towards a profit and is equal to profit that is sustainable and transferable. Oh, I gave the answer away.
That's okay. And actually, it could be looked at more than one way. Of course, the method that we're putting out here today is that profitability, or really revenues that are sustainable and transferable, as well as internal processes.
Yep.
Okay.
All right, I'm going to end this poll. We got 95% participated, so I'm ending it. And most of you said sustainable and transferable.
Okay, so I had a slide up a few minutes ago that showed the different ownership attributes of a private company and a public company. In a public company scenario, there's a lot of governance and there's a board of directors. And the board of directors is really the group that the CEO is accountable to. And in that case, who's looking out for the valuation of the business? Yeah, profit and value, they kind of go hand in hand in the slide that I showed earlier. But who is looking at protecting the value of the business? And in an accounting firm, you're going to have, in most cases, an executive committee that functions as a representative group that represents the owners. Not every partner is a member of the executive committee. If you have a firm of 2 to 3 partners, sure, there would be an executive committee made up of the 2 or 3 partners. But when you get up to 10 or 12 or 30 partners, the firm that I was with had 30 partners. We had an executive committee, and they were essentially our board. So anybody that was in a leadership position had to report up to that executive committee. The executive committee is really charged with protecting all elements that relate to the value of the firm, as well as making sure that the firm tracks towards its performance. But the executive committee is going to charge the CEO or the managing partner with performance. And what we see happen time and again when a CEO or a managing partner is trying to run his or her business, they're constantly dealing with issues. They're constantly putting out fires, and it's real hard for them to step back, pause, and look at the business as a whole. Again, another reason why the function of an executive committee or a board of directors is really a great practice. So these are the areas that we see. They're dealing with fires, fighting fires around growth. Are they growing too fast? Are they growing not fast enough? Is the firm well controlled by the owners, or are the inmates running the asylum? And what's happening with transition? You've got maybe an aging partner group. Do you have a transition plan for each of them? And are you putting it off? And eventually it becomes a large fire that you have to fight as CEO or managing partner. So that's the performance challenge that managing partners have. All right, so when we look at a business, we're looking at breaking it down into manageable parts. And the way that we've done this is we've dissected a business, a CPA firm business, into 4 different categories. There could be more, there could be less, depending on how you look at it. But we've found that the strategies and the objectives that relate to these 4 categories are easily separated and worked into a strategic plan. So sales is really sales and marketing. People is people, development of people. It's recruiting, it's human resources management. Firm administration would be billing and collecting, making sure that the WIP is being managed properly. That's kind of a hint for anybody that's on the call. If you're not managing your WIP on a monthly basis, that's a real easy way to increase the value of your firm. But WIP and billing and collections right there in the admin section, as well as internal reporting and how you communicate with your partners internally. And then delivery of services to clients. So those are the 4 different categories that we look at. And then you have partners or operational leadership that overlay this. Every partner has a responsibility at some point or another to deal with sales, people, admin, or clients. And typically what we can find here is that a partner or even a manager in a CPA firm could have a new business opportunity pop up. And you've got to get that proposal out. You've got to do it nicely. It's got to be professional. But at the same time, you've got to deliver a report to a client, and then your phone's ringing off the hook because you haven't done your billing for the month. So these are all competing priorities. Any one of them or two of them can hit you at the same time. And that's where the firefighting becomes pretty intense as well. All right, so those are the categories. And then if we were to take a step back and look at the business as a whole and just understand how the executive committee factors in with the CEO or the managing partner, and then each of these four categories, this is kind of the way we look at it. And as you can see, that the executive committee is responsible for maintaining the value, as well as holding the CEO accountable for performance. But the CEO is really focused on that bottom line. And when you're building a valuable business, sometimes you need to step back and make an investment in equipment rather than holding off on making that expenditure. So you might want to make an investment in people and hire ahead of the curve. That's going to impact your bottom line performance, but it's going to increase your value. So those are the types of things that can kind of work against the managing partner's mindset as he or she is kind of navigating through the process of managing the firm. All right, polling question number 4.
All right, we are popping up number 4 and launch. Oh, this is an important one. Sammy Sosa should be in the Hall of Fame. True or false? We could have put Roger Clemens. We could have put Barry Bonds. We could have put Mark McGuire. We probably could have put a lot of names up there. But you know, this is going to tell us a lot about our audience today, I think.
I think this is going to be widely reported on the news as an opinion poll as well.
Well, you know, if anybody follows me at all on LinkedIn or anywhere, they'll probably realize that this will go on LinkedIn later today, because we seem to market it. We seem to put everything out there. It is not going on LinkedIn, but we have 85% participation. I'm 47 seconds in, so I'm going to stop this in a second. I assume this means that if you're not voting here, you voted before, so I am stopping it. And we are truly at 50-50. 50% say yes, and 50% say no. And I honestly don't know the answer on that one. But
you have an opinion, and you have a right to your opinion.
All right, I'll keep it to myself for now. All you, Dan.
Okay. All right. So I just want to keep this image front of mind as we go through these next slides. You know, just understand that the executive committee has a charge and the managing partner has a charge. And sometimes they go against each other. Sometimes they're swimming in the same direction. But that's an important aspect to think about. So getting this model right and staying the course, you know, building the firm. If you're building a valuable firm, you're breaking the firm down into manageable parts. You've got strategies and tactics that line up with each of these 4 categories. You've got a managing partner that's got a strategic plan. You've got all of the governance in place that underlies the operation and carrying out of being an owner of the firm. You know, you're spending all your time working on your business as well as in your business. That's the cliche that comes out of Michael Gerber's E-Myth. This is about working on your business. So getting the model right and staying its course has pain points. And I thought I would just share some of those pain points with you, because we've seen them time and again. Firm owners can easily become focused on their lifestyle over firm growth. When somebody gets to a point where cash flow, if you remember the slide where I showed the life cycle of a business, there's cash flow that ensues for a period of time before wealth creation takes place. And wealth creation is going to take place largely when there's some effort put forth to build out that valuable firm. So firm owners can easily be focused on their lifestyle over firm growth if they get their cash flow on autopilot. And when that happens, key initiatives sometimes fall short of meeting their objectives. And you hear about this quite a bit in accounting firms, where internal initiatives get started and they die on the vine. And they die on the vine for a lot of reasons. And it's not to say that the people that are trying to get these initiatives off the ground are lacking any competence in the area. It's more about the fast pace of moving the firm forward and serving all the clients and being accountable to staff, being accountable to the marketplace and your networking, and still being accountable to your family. So it's real easy for these things to die on the vine. And when you're an owner and it's on autopilot, it's a lot easier sometimes to just go home and maybe hit the golf course or spend time with your family as opposed to driving firm growth. Now, family is important, so is golf, but I think you get the point. So inability to commit. Sometimes a managing partner of a firm starts to look at the time that needs to go into this as infringing on other things that he or she wants to do, or committing the people. There becomes a political aspect to that because you're maybe taking some people away from other initiatives internally or serving clients. Money, if you're going to hire somebody to help you drive this process forward, that costs money, and you need to see a return on investment. If you're going to have a robust marketing strategy and plan, that's going to cost money, and you're going to need to see return on investment. So a lot of times there's an inability to commit. And then the firefighting really impairs business leaders, owners, their ability to see the forest through the trees. One of the things that we see constantly, and I'm dealing with this right now with my clients. It's now May 19th, and this past tax season was one of the hardest ever. And the second hardest ever was last tax season, or maybe vice versa. But I'll guarantee in the last 3 tax seasons, they're in the top 5 hardest ever. And they never seem to get easier. And what happens is when you're trying to drive initiatives internally and build value in the firm, the seasonality of a CPA's business, the up and down, the let's wait until after the 15th mentality really hurts your ability to establish and follow through on the objectives for the key initiatives. So at the end of the day, do you have a governance infrastructure that challenges the owners and their compensation? If you've got multiple partners, or you've got managers with the same compensation incentives and expectations, where they're challenged to be aligned and accountable to the business. So these are some frustration points that I like to keep front and center because it's not easy. So the thought at this point is kind of, what can you do? Well, you can do nothing, and plenty of firms do nothing, and they do very well doing nothing because they don't know what's on the other side. They're doing pretty well as it is. They're cash flowing. So doing nothing is certainly something that you can do. Decide to tackle this internally. Deputize somebody on the management team to take this on, or work with an outside advisor who can hold you accountable and help take you forward. Either one of these options is absolutely sufficient. Simply because we're outside advisors, we would never have judgment on a firm that wants to tackle it internally. The bottom line is, can you accomplish what you set out to accomplish? Join a mastermind or peer group where you can share best practices. There are plenty of alliances out there where you can get involved and become a member to understand best practices of other firms and take advantage of some of their other offerings. Or you can join a peer group. Randy's got a little hint on that coming up here shortly. And for the do-it-yourselfers, even if an outside advisor comes in, but if you're a do-it-yourselfer, you need to envision a plan to go from good to great. Most CPA firms, it's a profitable way to do business. A a lot of CPA firms drop 30 to 40% to the bottom line, and that's pretty good. So are you okay with that? Or do you want to be better? Do you really want to position the firm for transferability of other owners? We saw the slide earlier where we compared the different attributes between a public company and a private company. Management is interchangeable easily in a public company. It's not interchangeable easily in a private company. So if you want to become great, you're going to have good transition plans for transferring responsibilities and eventually transferring ownership to the next generation of owners. Otherwise, you're going to be stuck in a spot where you've got to sell. And selling your firm outright is not always the best answer. In fact, it's the most disruptive answer. So when you have a less disruptive answer, such as internally transferring to the next generation, you're going to probably hold as an owner that's transferring his value or her value, you're going to hold on to that value a lot better through the process than if you go and outright sell. So, commit, seek alignment and accountability. We talked about that a minute ago. Consider using a tool. I'm going to share with you an example of what we use, and then get out there and execute and make it happen. In terms of the tool that we use, we've been using Core Value software for over 10 years. They were named to the Accounting Today top list of tools that CPA firms are using to serve their clients. It's a great tool to use to serve your clients and add a little extra value to your audit and tax and compliance related engagements. You can maybe also offer some value add consulting and do it through a navigation tool such as Core Value software. We use it with our clients to navigate our engagements. It's based on 18 different drivers of value. So you saw how I compartmentalize the business into 4 categories. Those 4 categories are further broken down by Core Value software into 18 different drivers. And through that process of utilizing the tool, we're able to uncover red flags so that the management team can really go to work on making improvements in short order and without a lot of political tension. Because if it comes up and it stays in the navigation tool as a red flag, it's probably a red flag. So the managing partner doesn't lose a lot of political capital trying to make sure that the ball can get moved forward with certain things that need to be corrected. And we look at other value enhancement opportunities. So we come up with a baseline valuation, and at the end of the day, what's the gap between the top line valuation that we could potentially get and where are the gaps coming from? So we look at it as a very good tool to help us enhance value. And it enables the firm and their management to get to work on building. Again, like I said, it's great to use internally and with your clients. So I've got here 18 different drivers. And if you're looking at building out a strategic plan for your business, for your firm, sure, I would look at the 4 categories and keep it simple. But those 4 categories are going to have certain objectives that come from this list. So there are 9 market drivers and 9 operational drivers. The ones at the top here listed, the first 9 are market drivers. And a market driver is something that really is influenced from the outside. It's what's happening in the marketplace. And you're less in control, and you oftentimes, as a business owner, you become more reactive, and your strategic planning is somewhat reactive and sensitive to what's going on in the market, as opposed to operational drivers, which are internally focused, and you can become easily proactive about getting on top of some of these things. So when you think about a CPA firm, most CPA firms are really strong from a financial perspective. They understand what they need to do, and they do a fairly good job of it. They're really good with their legal. They've got a good relationship with their insurance provider, and they've got a process around when to turn something over to legal, like a malpractice situation. So they've got good processes around that. They've always got strong operations processes because the profession is driven by standards, and the operations of a firm are going to be very much in line with meeting the standards. Areas where CPAs fall short, and you can see this is kind of red, yellow, and green. This is a real life example. Sales and marketing is falling short in this particular example firm. So, you want to, as a CPA firm, you don't want to just forget about sales and marketing. You want to be able to look at sales and marketing. You want to look at servicing clients. You want to work on keeping your people retained and happy and developed. It's a lot of different things that you need to look at when you're building a valuable firm. This is where the rubber meets the road, these 18 different categories. So I put a list in here, and you'll have this slide to take with you, or we'll be distributing it at some point after this discussion. But these are the ones that are most relevant to CPA firms. And then I wanted to put this slide in here. We're not really talking about selling a firm as much as we're talking about building a more valuable firm. But your valuation ultimately is going to be offset by retirement obligations and lease obligations, different things that could go against the actual enterprise value of the business. So you've got an enterprise value of the business, and then you look at the balance sheet and you understand, what other assets does the business have? Do they have a building that they're going to sell? That would be separate from the enterprise value of the business. It's just another asset that you might be selling. But I wanted to put this in here just so I didn't leave it out. Just to recap what we talked about, are you working on or in your business? Value can be defined many ways. The way that we look at it is, what's sustainable and transferable. That's the whole basis for this presentation. CPA firm owners are inclined to get to it later. We'd really like to see certainly our clients, but even if you're not our client, we'd like to see you take on initiatives that are working on your business and see them through until you meet the objectives. Only 1 in 4 businesses will sell at the price that they're looking for when taken to market. So you really want to understand what your valuation is at any given point in time. There's no requirement to be in the market to sell in order to build a more valuable firm. CEOs have competing priorities, so do managers and partners in an accounting firm. And sustainable and transferable companies hold the most value. So the last question here is, what can you do? But really, the question I have is, what are you going to do? And are you looking to increase the valuation of your business and become more profitable at the same time, make more money along the way because you've got a streamlined business, and rest easily because you know that at some point when you're ready to transition the firm, you're in the driver's seat? Okay, so with that, Randy, we could go into these next couple of slides. I think we should. And then after that, if anybody has any questions, we can do that.
Yeah, let me before we go here, I'm going to just set the stage on, this being the first. I think that what Dan has already told us is there's the importance of creating value in your firm and key points to that. With that being said, I'm going to get to these mastermind groups in a second, but our series that we're going to continue is going to build on the base that Dan set here today. So next month, our practice management series is going to be presented by John Hubbard, who's with Boomer Consulting, and John's going to talk about 5 strategies that will accelerate your firm's growth. Boom. Can obviously tie in what Dan just said. We are going to have a presentation on pricing models within your firm. That's going to make you more valuable if you can figure out the right pricing model. We're going to have a presentation on corporate culture. If you can attract and retain the best employees, that just is going to create a sustainable firm. And then we're going to have another one on, how you bring in new partners into the firm. Again, we're creating that transferable. We're bringing in new partners. It's part of this organization that we're creating that's going to live past us. It's not just going to be us. So this is a great setting the stage. And what Dan says, I heard this for the first time from Dan a couple years ago and was very impressed with it, and as I was today. So those are all things we have coming up that are going to continue to build off of what we discussed today. In addition, we're going to give you another opportunity if you're interested, is that we're starting some mastermind groups. Unique CPA Tri-Merit is going to team up with Integrated Growth Advisors for these mastermind groups. And Dan, if you want to move forward. Who's a good candidate? Are you a good candidate? Are you intrigued by what you heard today? So if so, we're going to put these together. More information is coming out. This is it is in the very far along creation stage, but not at the point where we have all the information we can give you. But part of what we will give you, if you're interested, is this baseline firm evaluation, and Dan will identify the valuation gaps. We're going to have monthly peer-to-peer roundtable discussions with other members who are in a similar situation to you. You're not going to be in a mastermind group with a $100 million firm and a $2 million firm. It's going to be your peers that are going to be talking together and working out, making you a better firm, sustainable and transferable firm. And then you will have access to Dan and his partner Robin as well in this. And so this is just some interesting information. Dan, if you want to go to the next slide. Right now, if you do want to get in for more information on this, well, here's who should join: managing partner, CEO, COOs, members of firm leadership, executive committee. And again, we're looking at firms that are going to be similar in size and structure that will be on the same group. In addition, for more information, you can email David, at info@Integrated Growth Advisors. I think this is a great opportunity to really spend the next year creating this valuable, sustainable, and transferable firm. And so excited about that, but excited about continuing this series as well. In addition, and Dan, I didn't know if you wanted to go anything else, but I'm going to keep going for a second if you got time for me. All right. In addition to that, and I mentioned this last month on our webinar, the Unique CPA virtual conference is going to be November 30th and December 1st of this year. We have 10 great speakers out there. They're going to be touching on 5 practice management subjects, and then 5, I think it was 5 and 5. The other 5 is, tax and technology subjects. So it's going to be a great makeup. Really looking forward to that, and we will have all the information on that out in July. So plenty of time to get registered for that. With that being said, Dan, any wrap up you have?
I just want to say thank you very much. There was a question that came in. What made this tax season any more difficult than last? They're all difficult, right? I only know what my clients tell me, and I probably am surveying them at the very moment when they're going to speak to their greatest pain. The same person that put that out there made a really good point that their people are their inventory, and their firm is a business, and they're inventorying their hours. Okay, so one thing to think about in terms of valuing your business and making your firm more valuable is, of course, if you've got inventory and they're your people and you're paying close attention to it, make sure you've got the infrastructure to be able to manage those people and manage their hours, and make sure that they're utilized without being completely exhausted, I guess, so to speak. So I thought that was a pretty good comment that came out. I don't know if anybody else has any questions.
I think I've not seen any more come in. I think Again, I want to thank you for the presentation today. I think this is great information. I think people have to have that mindset of the CPA firm as a business, and that you can create this business has a higher valuation tomorrow than it did today. You know, it's not based on how many more clients you get, but it's based on how you treat everything internally. So I appreciate the information, Dan. I thank everybody for being here today. Watch for our next two webinars, which will be the next one will be on COSSEG 178D and 45L. Some interesting information there, and then again the growth presentation that we have coming out. I think it's June 23rd. So thanks everybody. Thanks Dan, and thanks for being here.
Thank you.